March is done, so that means another dividend portfolio update. In this episode, there's yet another double-digit dividend increase. Great year-over-year dividend progress, and on top of that a record high portfolio value. I've also added another company to my portfolio, which I will cover as well. A little hint, it is a stock I've mentioned multiple times lately. Last month I bought shares of 3 different companies. And I started 2 new positions. But what did I add this month? Before we get to that, I will first show you my full portfolio before the purchase, and I will highlight some different stocks worth noting this month. At the end of the video I will reveal my full portfolio progress, including gains. The REIT sector is still the biggest, but the healthcare sector is now in second place at 19%. In the last video someone pointed out that CVS should probably be in the healthcare sector now. After some investigation, that is definitely right. At the time I bought CVS they had not acquired Aetna yet, and I'm pretty sure they belong to the consumer staples sector, and after that I never thought twice about it. The financials and industrial sector are almost tied for third place. And for those of you who are regular watchers of these portfolio updates, you might notice a small but significant change in slices. Because the energy sector is now also represented in my portfolio. And that has to do with my latest purchase, which I will talk about in a bit. But first, 2 companies that are worth noting this month. The first company worth noting is Sonoma. Was I up 142% on my cost basis in the review of February? Now I am up 230+%. That is absolutely insane. This has to do with the resilience they have shown as a retailer through this pandemic and great Q4 2020 results, where they not only beat analyst expectations out of the water, they also increased revenue almost 25% year over year and expanded margins by 2.5%. The second company I want to highlight in my portfolio is CVS, which is now within 2% of my cost basis and was even around break even for a bit, after being in the red for many years. CVS is definitely a long-term play for me, as I am banking on increasing dividends next year after they have brought their leverage from the Aetna acquisition down. So what company did I end up buying in March? It is probably not a surprise if you're a regular watcher of the channel, but I purchased 5 shares of Enbridge for around $37 for a total cost of about $185. Now, in the last update I said I would preferably buy more shares of either Visa or Pepsi, if the latter one stayed around the same price range and Visa if it would drop below $200. Neither happened, as Pepsi shot up to above $140 and Visa did drop but not enough to go below $200. With the purchase of Enbridge I finally have a position in the energy sector. I might do a full review with my reasons for buying Enbridge, but in short I like their debt relative to peers, their forward-looking vision, they are years ahead in terms of investing in future energy generation such as solar and wind energy, they have a stake in 4 renewable energy projects in the US. Another reason is of course their current valuation. Their 5-year average yield is around 5.5%, so locking in a 7+% yield is absolutely great. Another reason is their predictable revenue stream, which is somewhat protected by long-term contracts and their white moat with an irreplaceable energy infrastructure. Their DCF, or distributable cash flow payout ratio, is around 70%, which is perfectly fine as well. At the end of the video I will show you how much the value of my portfolio now is, including this new addition. But first, the dividends. Sonoma raised their dividends again by another 11%. That is the second dividend raise in 3 months. My yield on cost is almost up to 4.4% now. My recent purchases definitely add to the dividend payouts in the 3rd month of the quarter. This month I got paid by 7 companies. 3M for 7.55, Johnson & Johnson for 2.58, Northwestern Corp for 3.69, PepsiCo for 1.74, Qualcomm for 3.31, VF Corp for 2.50, T. Rowe Price for 5.51, and this amounts to a total of $26.87. That is an increase of 66% year over year, and an increase of 11.5% quarter over quarter. Geez, another family dinner at McDonald's. I'm almost able to live off those dividends. Joking aside, I really like the progress. Hi there, I'm Tom from the Dividend Attitude Show. On this channel I make videos about dividend stocks, whether it be dividend stock battles or dividend stock analysis on an individual company. And once a month, to track my progress and be transparent, I show an update of my portfolio, just like this one. With my purchase of Enbridge, my annual forward dividend income is now at $533, which is another increase of $17 compared to the previous quarter. That $533 would give me 13.3 hours of gifted working time or free time based on a salary of $40 per hour. But passive income is about earning money without working for it. So how much would my dividends pay me if it was a 24/7 job? I would be paid a monthly salary of $44, and based on 30 days I would get $1.48 per day and 6 cents per hour day and night. The goal this year is to get to 1,200 in forward annual dividends, or 100 per month on average. So with 533 I'm at 44.4% of that goal. Long term the aim is $30,000 in annual dividends. So I'm getting awfully close to that goal now with $533 as I am 1.78% of the way there. As always, a little bit about my future purchases before we go to the total portfolio progress for the month. Like I said before, last month I mentioned I will either buy more shares in Pepsi or Visa if they are at good valuations, which did not happen. And otherwise I said I might buy in the healthcare sector, which also did not happen. The reality is it really depends on the valuation at the point I have new funds available. For now, if either Pepsi, Visa or Enbridge are at desired price levels, I will further build my position in either of those stocks. In regards to the funding of my portfolio, which is now around $150 per month, I'm getting closer to paying off my tax debt. So I hope that by June or July I will be able to at least double the funding after that. Now, time for the total performance of this month. My cost is now at $11,300, but my value now stands at $15,684, which is a gain of almost 39%, and including dividends a gain of 48.5%. That is almost 10% higher than last month, which is always nice, and this is the highest my portfolio has ever been. If you want to learn more about dividend investing, you can watch stock battles between stocks if you click on the playlist in the bottom right. If you would like to see my portfolio progress over time, then click on the portfolio playlist in the top right. YouTube thinks you will like the video in the top left. Until next time, bye bye.